Hey, good evening, guys. This is Sam, and I'll be doing the video for February 28th, 2020. So we had quite a week this week in the stock market. Broke some records to the downside. Most points lost in a day. Most points lost in a week. So all kinds of records being made in the stock market here. We did have a pretty strong close here today on Friday, and that's kind of what I'd like to bring you today. The potential that we continue down, I think, is pretty strong, but at the same time, being traders, we do have to kind of ebb and flow with the market and try to find places where the momentum and support kind of coincide. So I'm going to show you two tickers today. I'm just going to show you SPY and Apple, and I think these two tickers are pretty representative of the entire stock market currently. If you look at most stocks, they will resemble the SPY. So most things are moving with the indices, and I think Apple just is a really good heartbeat of the market, if you will. So let's go ahead and dive in and take a look at what's going on here. So SPY here, you can see the sell-off, pretty strong sell-off there. Now, we did find support at a Fibonacci target, which is right around 286.20. So this is going to be kind of the benchmark of the rest of the video here, is finding a level and then finding what is the momentum going into the level, right? So here's your current level, and whenever we have a level like that, we expect for it to be the floor, but we like to see momentum structures confirm that. So we have that 286.20 level on SPY, and what I want to see when you go into that level is on these intraday time frames, like 130 minute, I like to see the indicators confirm the oversold condition at a support level. When you have an oversold momentum condition going into support, it's like gently falling onto a bed of feathers, if you will, versus when you don't have oversold conditions and it's like getting dropped out of a window onto a floor. Two completely different scenarios there. And this one is really more of the one that can bounce. So we're going to go into next week with an open mind that even though it has been a historically bad week, we can see pretty substantial bounce here in the indices. In fact, the size of the drop here is so large that a regular bounce just back to normal resistance would take us up about 170 S&P points. And that would give us a target right around 313. So that would be a heck of a bounce and definitely worth trading. The other name that I'd like to show you here, it's going to look very similar, but I'd like to just kind of isolate one major tech name to just kind of confirm what I'm seeing in the indices. So with SPY, we had a dedicated support level, and we had momentum structures that were indicating very oversold conditions. So that's kind of the opportune place to bounce. So here's Apple. And on Apple, the level that I have is 258.35 was the support level that I had on the chart. And it's very similar to SPY, right? So you have a support level, and then what does your momentum structure look like? And you can see here that Apple actually has quite a bit going for it here in terms of a potential reversal. Now, I do think that it can bounce somewhere up to about 290, which is the complementary resistance to that support is at 290. So it can bounce there. And you can see here on the momentum indicator, there's your floor, and your momentum indicators are showing deeply oversold conditions that are rounding out. So we could see a pretty decent bounce here as these indicators start to bounce to reverse. I would look for a target on Apple, a bounce target on Apple of about 290, and on the S&Ps right around 313. So we'll see what happens next week. Of course, the market is still being driven by extraneous fears, but these two signals that I'm seeing in Apple and in SPY, and in the bond market, frankly, there's some signals there, indicate to me that at least in the very short term, the downward pressure might be relieved as early as Monday. Now, do leave open the possibility that we can continue lower, because even though I showed you this bounce pattern on an intraday time frame, If you go over here to the weekly time frame, you can see that it is nowhere near oversold. So you kind of have two conflicting messages, and I think they'll both be right. I think this one will be right in terms of a short-term bounce, and I think this one will be right in terms of overall direction for the next 2 to 3 months. All right, guys, hope this was helpful, and we'll see you for the next one. Cheers.